Why is hope not good in trading? Hope is a positive emotion in everyday life, but in trading, it can be dangerous. Unlike calculated decisions based on data and strategy, hope relies on emotions, often leading to poor risk management, unrealistic expectations, and avoidable losses. Let's explore why hope doesn't belong in your trading mindset. 1. Hope distorts objectivity. Traders who rely on hope often ignore clear signals that a trade is failing. Instead of exiting early and limiting losses, they hope the market will turn in their favor. This distorts objectivity and replaces discipline with wishful thinking. The result? Small losses turn into big losses. 2. Hope delays decision-making. When a trade moves against you, your system might tell you to cut the position. But instead of following that rule, hope whispers, just wait a little longer. This delay in action often leads to bigger drawdowns and emotional fatigue. In fast-moving markets, hesitation is costly. 3. Hope encourages revenge. Trading. After a loss, traders may hope to quickly recover their money by jumping into another trade without proper analysis. This kind of revenge trading is driven more by emotion than strategy. It's a cycle fueled by hope, and it rarely ends well. 4. Hope replaces risk management. Hopeful traders often take oversized positions thinking this one will work. Instead of managing risk, they place bets based on emotion. When things go south, they're left exposed without a plan. Trading should be about probabilities, not dreams. 5. The danger of hoping instead of planning. The most successful traders focus on process, not outcomes. They don't hope for profit. They plan for it. This means using stop losses, taking profits at predetermined levels, adapting to market changes, reviewing performance without bias. When hope takes the wheel, logic and preparation are thrown out the window. Replace hope with strategy. Hope has no place in a profession that demands precision, discipline, and adaptability. A trader who hopes is a trader without a plan. Instead, rely on tested strategies, follow your trading rules, and accept losses as part of the game. That's how consistent, profitable traders operate, not by hoping, but by executing.